I actually met somebody called Lord Lee, and I'll plead my own ignorance. I didn't know who he was, but obviously, he sits in the House of Lords, and he was a former Conservative MP that became a Lib Dem MP. I've learned all of these things. He was a really interesting guy, and we had a conversation about investing because he was there as well, because he is apparently the first ever ISA millionaire. So when you see those stories in the press about ISA millionaires, apparently he was the first ever one. And he's really enthusiastic about trying to engage the younger generation in investing in the stock market. In his case, he's particularly keen about trying to get them to invest in individual stocks and great British companies. And it got us having this conversation about how he's trying to do that. And it inspired me with an exercise that I'm probably going to try with my own daughter. So obviously I talk about the process of investing, how anyone can do it. It's very simple, straightforward. You can invest in diversified portfolios that are provided by companies out there like robo-advisors, like the likes of Vanguard. But actually one drawback is that they don't necessarily understand, I'm talking about young people or people who are new to investing, what's really going on underneath and why their portfolio moves like it does. And for me, that's important because when you see your investments go up and down, it's okay seeing a risk warning, but you need to understand why, because if it goes up and down and you understand why, then you're less likely to make a knee-jerk reaction and bail out of that investment, and you're more likely to stay in it for the long term and benefit from all those things like compounding over time. And he told a story about when his children were younger that he wanted to get them into stock picking. And so he got a portfolio that he picked of stocks, individual stocks, and then he would ring them up every now and then or speak to them and say, look, here's your portfolio, this is how it's going, hoping that they would engage with the individual companies that he'd bought into, maybe like Marks and Spencer's, and how things were going up and down and how it was doing, and try and engage them with it. But unfortunately, he said it didn't really work. They just sort of would turn around and go, oh, wow, that's great, kind of keep up the good work. So he thought he'd try a different approach with his grandchildren. And instead what he's done is he sat down with them and decided to say, right, you go and pick a range of stocks out there and we'll buy them in companies that you know, that you understand. So a good example is something like maybe Hollywood Bowl. It could even be a company like McDonald's or whatever it might be. His focus was on British companies, but there's no reason now extending this why you couldn't do it for any company out there. And the idea was not trying to necessarily pick winners. Of course, they're looking to try and grow wealth over time, but teaching them about what it is companies do and how things work. And if you think about the idea of a company, maybe it might be like Marks and Spencer's. If they buy the shares and they buy a whole range of them, they sit down next year, look at what's gone up and down, and they see Marks and Spencer's has gone up or it's gone down versus other ones. Then they try and understand why it's happened and also which ones they're going to maybe keep or which ones they may be going to get rid of. And so those investments he tends to favour are dividend payers, the power of that compounding, using those dividends to buy more shares going forward. And he gave a really good example of one of his grandchildren decided one day to ask him, can we invest in Standard Chartered, which he was quite amazed at. How do you know who they are? And he was like, well, they're the sponsor of Liverpool, his favourite football club. And so they invested in Standard Chartered. But the point is that this exercise really does engage you with understanding why things happen and why markets move the way they do and the fortunes of companies, but also understanding that when you buy a small part of a company, you are buying into the future of that company and those profits, and you're getting your share of those profits via dividends, which when you start to explain that to children, that does blow their mind. And I have to say, most people don't realise that. You buy products and services all the time, but you can actually invest in those companies. And there was a good example, which I can't actually remember now, but if you'd invested in the stocks of Apple every year they brought out a new phone rather than buying a phone, how much money you would have. And it's an incredible number. You've probably seen it on Instagram and things like that. But the point is, you understand what you're investing in, which is a key part of investing, but also engages you with economics about what's going on in the economy, what factors influence, for example, if you'd invested in Apple shares or you invested in Tesla, which was a good example when the US presidency occurred and Donald Trump won the election, their share price shot through the roof. And you might be thinking, what happened that day? Even you and I, Andy, have had conversations about shares where you'll go, why is that share suddenly shot up? And we then look into the reasons and then suddenly there's something happening in the real world. It's more than just the shares. It's about economics. It's about even politics, all sorts of things that really start to engage them. So having learnt that from Lord Lee in that exercise, the world has moved on massively from when he first did it. Because obviously back in the day when he would have done this, you would have had to have a stockbroker and probably sizable sums to start actually investing in shares, because to buy one share of some of these big companies that I've mentioned would actually be quite expensive. But fractional investing and investment platforms and apps that allow you to invest from very small amounts of money mean that anybody could now go and do this, and with a relatively small amount of money buy a tiny stake, part of a share even, a fractional share, to be able to build a portfolio that engages their children, for example, but also even them, so they start to learn. Now, you can, of course, do this as a paper exercise without buying real shares, but you can also on some platforms do dummy accounts. But there is something quite nice about doing small amounts of money to build a portfolio that you sit down with them over time. Maybe every year you review it again. It's that nice element of teaching them about not reviewing their portfolios too regularly, about making changes too regularly, but reviewing them perhaps every year and finding out what's working and what's not, and changing it over time and inspiring them to invest. And it may be they start to realize the power of things like tracker funds, but they also start to understand costs and the importance of keeping them low, because it eats into their profits, which is something else that's particularly important. So I love the idea. It's an exercise that I've mentioned to my 40-year-old daughter that we're going to try, and I'm going to update people in the future. But Andy, I just want to bring you in because you have obviously expertise in doing a lot of the reviews on the Money to Masses website about platforms that offer fractional investing, for example, because not all of them do. So some ideas here for people. If you want to start this kind of concept, then this is one way of doing it.
Yeah, so that's right. There's lots of apps out there and lots of platforms that do allow fractional investing, but there are lots that don't allow it. So I thought it'd be quite good to just quickly go through an article that we've got on the Money to the Masses website where we list all of those that do and that don't. Also, we give details of the minimum investment needed, and we also give some information about how much it will cost to invest with those particular platforms. So just looking down now on the screen, we've got a list of platforms there. So I'm just going to reel off the ones that do, because for this particular piece of the podcast, that's what we're really interested in. So it's the ones marked in green, as you can see on screen there. So eToro are a platform that allow fractional investing, Freetrade, Interactive Brokers, and then we go down further. We've got Moneybox, New Wealth, Plum, Revolut, Robinhood, Trading 212, which I'm sure a lot of people have heard of, and Webull. Now, as Damien mentioned earlier, there are some of these platforms that allow you to use what they call a dummy or a demo account, where you get a fictional amount of money, a virtual account where you can effectively do these trades without having to risk any of your own money. Now, platforms allow you to do this for free, so it's a really good way to get a feel of how these stock prices are moving from day to day. As Damien said, really you should be looking for the longer term, maybe only looking to tweak things once a year. But this virtual account gives you the ability to be able to tweak and test without risking your own money. Now, eToro have a demo account where you get $100,000 to play with, and Trading 212 is another one where you get $50,000 of virtual money and you can just play around and see how you get on. Looking at the other options, Moneybox is a solid starter option for people. They're a relatively straightforward app. There is, however, a slight lack of choice with Moneybox. They've only got around 20 individual shares that you can invest in. And if you compare that to someone like Freetrade, for example, even just their basic account, you get access to well over 6,000 shares. So that's something worth considering. Freetrade's FX fees can be slightly more expensive, but if you upgrade to the Plus plan, those fees come down. And actually, Freetrade also pay interest on any uninvested cash. There are ways that you can look around this and work out the costs. Have a look around. We'll put a link to that article in the show notes, and people can have a look at which platforms may be best for them when considering fractional share investing.